What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. Today, we are going to be looking at this gold chart, okay, and taking a look at this 3 session setup, okay. I did not trade the New York session today. I was up late last night and I actually took my 50 pips out of the London session. All right, and you will see that in an upcoming video that will probably be released later today. All right, but I have a few specific things that I would like to talk to you about today. All right, so let's get right into it. You can see we're looking at a 5-minute chart right here. Now, this is a 3 session master pattern type of setup. All right, you can see we have our peak formation low right here in the Tokyo session, which this isn't technically the Tokyo session, okay, but it is the peak formation low. You could have come over and used this as the low if you wanted to, okay, but I used this. So we have our peak formation low, then our peak formation high. Now, something to understand about this, all right, is that when we put in this peak formation low and we start going higher and we put in our peak formation high on the way up, okay, this is technically on a small time frame an uptrend, okay. Now, an uptrend is when we are in the process of printing a series of higher highs and higher lows. When you have an uptrend, the higher highs are considered weak highs because they are broken through on our way to put in the next higher high, right? And the lows are considered strong lows because they remain unbroken while we go higher. All right. And then here, when we put in our peak formation high, we start to trade lower and we break through these lows, which were once strong lows, right? And then we break through totally over here, okay? And this is our official lower low that breaks strong lows to the left, okay? What were once strong lows. The market is shifting from the front side to the back side, okay? And what that means for me is that I am looking for a pump and dump in the session, okay? If we are putting in lower lows, we are looking for the market to pump up and pull back, right? Before it collapses again to put in the next lower low. And you can see here we had the pump and dump going into the 9:30 open. And again, we pumped up one more time right around 10 a.m. for the pump and dump. And technically, you could say that this right here, before the session, we pump up and dump, okay? Pump, coil, dump, right? So I hope that you can see this, why we're marking off this as a lower low on the inside, okay? It's because we have broken through these strong lows to the left, right? This one in particular, we trade back into this one, but we break these lows, okay, that were once strong lows in our mini uptrend, okay? Now here, I'm trying to show you sort of, when the market pumps up, we might wonder, like, how do we know where it's going to stop pumping up and then go lower, right? Well, we can use the previous day's levels, okay? But in this case, we're looking at a 3-session setup. We're using the previous session levels, all right? Now, the high of day level is an area, a price area, an area of interest, okay? It's not a specific price point, okay? We do have a specific price that is the high of the day, right? But in general, it's an area. And how you mark off this area is up to you, Okay, it's a little subjective, but you can see what I did. I used the highest high and the lowest low of this little consolidation area, and this is my high of the day level. So you can see we put in that lower low, we start to pump up again, and we pump up into that high of the day level before dumping down and putting in our next lower low going into the session. Okay, now we're in the session. The market pumps up into that 9:30 timing window, the stock exchange open, right? Back into these levels. Okay. So we are still working the high. Okay. Same thing with this 10 a.m. pump up. We pump back up into these highs. We're working the highs. We're working that high of the day level. All right. Before we collapse. So that is one way to know when the market may be done pumping up, all right, because it's going into a previous session's level or whatever. And I'm going to give you another little bit of advice for this with a later slide, okay? But also, we are looking for specific patterns, okay? So when the market pulls back, we pump up, we're working the high, we're looking for specific patterns, namely M's at the high of the day, all right? So since we're looking for a pump and dump, when the market pumps up, we're looking for it to print an M pattern, okay, to reverse and go lower. And here's our 1 minute M pattern. Now, something to understand here is that this pattern appears different on different time frames. So on the 1 minute, we may be looking for this micro M pattern, all right? But that same M pattern on a 5 minute time frame will be an engulfment, okay? So there's the engulfment. That same 5 minute engulfment is a 15-minute pin hammer. Okay? You see that? Now, when it comes to entries with this pattern, I'm looking to enter the market when we break that middle structure. All right? Now, here, you can see we did break through that middle structure. And if we got in, like as soon as we saw that happen, we might have gotten stopped out here. So we still might have been early. But generally speaking, waiting for that middle structure to be broken is one way to avoid being the first mouse, okay? Or you could wait till we break this level. Bam, you get in and you can see that the price does not go back against you, okay, for the remainder of this move. Okay. And if you're in this move on a 1 minute pattern, when you see this, when you see this W printed down here, that is your sign to get out of this market. Okay. That's our potentially a W pattern at the low of the day, a reversal signal. You get out of the market when you see it. Okay. If you're trading on this 5 minute, okay, you got this doji candle, I think they call them, right? But then this market drops. We could get in at the break of the body of this last bullish candle, okay? And this market doesn't come against you. On the 15 minute, it's the same thing. As soon as we break the body of this big bearish candle, we could get in this market, right? Or when this 15 minute pin hammer closes, you can just get in the market, right? You don't have to worry about being super precise with your entries. Sometimes it's more important to just get in, all right? Now, here is this extra tip when it comes to like knowing, okay, we're pumping up. When is that pump going to stop? And when can we expect to see that M pattern for the trade? Okay. So just a second here. So you can see that I have these marked off, right? 1, 2, 3, 4. So the number 1, we have our first official lower low on the back side of this move. Okay. And then number 2, we have this bit of price movement that breaks through that lower low. Okay. So we put in another lower low, and this is a form of a breakout. Okay. It's not a breakout in the sense of, breaking a previous daily level, right? It's not the traditional sense of breakout, but we did break down and break through this low. Okay. And I just call that sort of like a breakout. Okay. And number three, we're zooming in right here. This is the origin of the push that broke that low. Okay. Number four, price often pulls back to the origin place of that breakout, simply working the high and pumping for the dump. Okay. So when this market breaks that lower low and then starts pumping, and you're wondering, how far are we going to pump up? We often will see price pump back into where that breakout occurred. Okay. Where, back into the origin of that push that broke through the low, right? And you can see this is a perfect example. Same way right here, the London session, right? You could say this push or even this push is responsible for this initial lower low. And then when it pumps up, we pump back up into these highs, back into the origin of that breakout, okay? Which even could have been right here where we break this low, okay? This is the push that's responsible for that. And you can see we pull back into those levels and then dump. We break this low to the left, the market pulls back to where that move originated, okay? And then we start to dump. We get our M pattern in here, okay? And we can secure our entry, all right? So I hope that that makes sense for you. This was a very well-engineered chart. Technically speaking, on a day like this, a Monday, it doesn't really matter what day it is, right? But you can be using this master pattern, okay? Sometimes we use it over the course of 3 days. Other times it may be over the course of 3 sessions, like this trade here. And you can use this instead of counting days, right? And trying to figure out if you have a 3-day setup or whatever, all right? You can use this master pattern. And you can see here the previous day, you can't really see it, okay? But the previous day pumped up real high and then failed and ultimately closed lower than it opened. And this is the low of that day. This is the low of Friday, okay? That was the lowest point. The market's putting in lower lows. So if we are going to take out this lower low as a target, we're looking for a pump and dump. And you can see the pump and dump. Okay. So this on the day, this is the front side of this move. And then when we start putting in the lower lows, this is the back side of this move. And you can use this master pattern like this on a daily basis. And it will look just about like this every single time. Okay, if you're looking for a pump and dump, you're going to have a peak formation low, a peak formation high, lower lows on the inside, a pump and dump. Okay, or you're going to have a peak formation high in Tokyo, peak formation low in London, higher highs put in at some point for a dump and pump in the New York session. All right, so this master pattern is invaluable. Okay, it's priceless. Okay, shout out to Sniper Trades for putting me on game. He's a real one, bro. Okay, so that's the simple breakdown. I hope it was easy for you to understand. I hope you get something out of this video. And like always, I appreciate you very much for being here. Okay, until next time, I hope you continue to free your mind.